Welcome to the Power of Design podcast. My name is Jack Osa. I'm an architect, born and raised in Colombia, South America. Years ago, I migrated to the United States to follow my dreams, and today I'm the founder and principal of Osa Studio, a multidisciplinary architectural design firm in Charlotte, North Carolina. In this podcast, we talk about design, business, creativity, and the inspiration we need to create an exciting and powerful built environment.
Our guest today is William Hodges. William founded Piedmont Capital in 2021, a commercial real estate firm that focuses on the acquisition of core plus and value-added real estate investment opportunities throughout the Carolinas. William is responsible for the strategic direction of Piedmont Capital and sources all opportunities for the company. Join us as we delve deep into William Hodges' journey, exploring the milestones, challenges, and triumphs that have shaped him and his team into the real estate visionaries they are today.
William, welcome to the Power of Design podcast. How are you today?
Doing well, Jack. Thanks for having me.
Sure. I'm excited about our talk because, we've known each other for a while, and we had done some work together where I designed some things for your company. And lately we became partners with this beautiful building.
Yeah.
We purchased and renovated. So I'm excited about conversation.
It was a long commute here today.
Oh, yeah.
Down the hall and to the right.
Yeah. So, William, tell me about your background. Where did you grow up and how did you get to where you are today?
Yeah, sure thing. I'm actually born and raised right here in Charlotte.
Oh, wow.
Yeah. Unicorns, as a lot of people call me, but there's actually a whole lot more of us than people think. But yeah, born and raised here in the peak Charlotte Hornets era in the 90s. And left here to go to the University of Georgia in 2005. Studied real estate there for 4 years. Graduated in 2009. Did a 4-year pit stop, pun intended, working in NASCAR.
Oh,
was a
nice.
big NASCAR fan growing up.
Oh, I didn't know that. What did you do there?
I worked in Daytona Beach for one of the track ownership groups. So it's not this case anymore, but the majority of the tracks used to be held by publicly traded corporations, and I worked for one of those companies.
And what was your
your
job?
I was in sales. I was I did media sales for a group called MRN, the Motor Racing Network, the voice of NASCAR.
Okay.
And I also did a year at Darlington Raceway in Darlington, South Carolina.
So who did you have to sell to? What were you selling?
It's interesting that you asked that because I was only doing the media sales component for a year. And like so many things, it takes you a while to figure things out. But I was cold calling a bunch of companies, the big sponsors that were already on the cars in the sport. And then, learned, thankfully not too far along in the gig, but there's actually agencies that place all the media. So
nice.
Worked with them primarily, but called on, Outback Steakhouse, Coca-Cola, had a lot of existing relationships with bigger sponsors already. So a lot of it was maintaining the existing relationships.
Interesting.
Yeah, did that. Worked in the sport in total for about 4 years, and then got married and moved back to Charlotte in 2013, right when things were really starting to take off here.
Mm-hmm.
Got into commercial real estate, worked for a family company called New Forum, started out doing apartment leasing in 2013, did that for about a year, and then got my real estate license and did landlord rep on the retail and office side for the Airsley development out in Steel Creek.
Okay.
So got a lot of exposure to the leasing side. That was kind of the genesis of a lot of my relationships in the business that I'm very thankful to have to this day.
Interesting.
And then,
so your first job, in sales and cold calling, did you feel that some of those experiences and skills that you learned help you once you move to real estate?
Yeah, absolutely. Because at the end of the day, any business, whether it's real estate or selling widgets or selling a service, you're going to have a sales component tied to it. So
sure.
Business development is arguably the most vital component of any business, because
That's
you can
correct.
have your finance and your operations buttoned up, but if you don't have business coming through the door, the latter two are irrelevant, because
Sure.
you don't have any customers to serve, and you don't have any revenue coming in. So it was definitely good getting cold calling experience. It was also good just learning a different industry entirely. So,
Yeah.
because while I was in motorsports, and it was really cool to like achieve that dream, at the end of the day, I was a media salesperson, and I didn't have any background in selling media. So figuring out how to navigate that landscape, especially when everyone that you're trying to sell to has been around it for, at minimum a decade.
Yeah.
Trying to learn the lingo and being able to adapt yourself to what that industry is, it was highly transferring over to real estate, because
Yeah.
despite being a real estate major at the University of Georgia, a lot of what you learn in classes and textbooks is not imminently transferable to the real world.
Sure.
You don't learn about what a triple net lease is. You don't learn about what a landlord rep or a tenant rep is in those classes. And the most important component, obviously, you don't get those relationships.
Right.
That ultimately is the genesis of all opportunity in our business, is creating
And
relationships.
you don't learn how to sell.
Mm-mm.
Was it easy for you to do cold calling, or?
No, it wasn't. I mean, it's one of those things that you ultimately get better with time. And I know a lot of people that they love it. They
Yes.
have spreadsheets that are just filled out. I like it. I do enjoy it. I will say, it's a facet of the business that is required, but I am very thankful to have created the relationships that we have with the broker network that we have, because a lot of times they're the ones that are creating a lot of the opportunities. And if you have the relationships with them, they can help you fill up your pipeline. But our preference is still to try to create relationships with property owners directly. And cold calling's a huge component of that. And a lot of times you'd be shocked how many people like take umbrage to the fact that you're just trying to make an offer to purchase their building.
Yeah.
But I will say, I will take that quick no over silence any day of the week. And honestly, one of the great things about it is the relationships that we've been able to create with the folks that we bought properties from, and being able to maintain contact with them, long after we purchased them, and we'll get like a text message or a phone call from them being like, hey, it was back in the first property that we bought at Piedmont was up in Blowing Rock. And the owner actually texted me about 2 or 3 months ago. We closed on it 2 years ago, but he was just checking in to see how things were going.
Yeah.
So, cold calling is a vital aspect of our business, has a lot of pros, has a lot of cons. And you always got to be prepared to have a phone hung up on you more often than not.
I respect when people call me, because I know how hard it is.
Mm-hmm.
I do it when I have to.
Yeah.
Because it's hard.
It is hard.
And when somebody call me, I give them the time, because I'm like, man, I know this is hard, and at least I want to hear what you have to say. Even if I'm not interested, just 2-3 minutes of your time.
Well, I can't tell you what a positive impact, being in their shoes, what that has on them, because you don't know what kind of day or week they're having. If it's just a big dry spell where they're not getting rapport with people, or even getting responses, even getting someone cordial enough to call them back, even if it is a no. Yeah, it's not the win you wanted, but it's still a minor win. And I very much try to do the same thing, because now being on the other side of it, in some instances, we receive calls from folks, and I always do my best to try to get back to them, even though we're not actively looking to sell anything.
Sure. Tell me the story about you starting your own company. Why did you make that decision, and how did you go about that?
So COVID hit and changed everything for anyone that's ever sat in this seat or has listened to this podcast, and all over the world, obviously. So I was at New Form doing leasing for our assets out there, but in the 2 years prior to COVID, had started a internal acquisitions firm called New Form Partners. Okay. And as COVID hit, it really kind of made me look at what I wanted to do long term with my career. And ultimately, I didn't want to focus on leasing. I really enjoyed the acquisition component of our business, and decided to go out on my own in 2021 and put 3 properties under contract the first year and very quickly learned that I did not know everything that I thought I did about the business. I probably knew 10% of what I thought I knew. And then what I didn't know, I didn't even know what I didn't know.
Right.
So there was just a lot of unknown. And thankfully, on those 3 deals, found 2 amazing joint venture partners that were able to come in. We did 50-50 equity raises on all 3 of those deals with the 2 separate partners, respectively.
Yeah.
On the Blowing Rock deal that I mentioned, that was with a group called Savara Hospitality out of Virginia.
Mm-hmm.
They were owners and managers of a hotel near the one that we were under contract on, and cold called them and just said, I see that you all own the property 2 doors down from the one I'm under contract on. Here's the business plan. And would y'all have interest in managing it? They said yes. And then they asked if they could invest in the deal. And I was kind of drinking from a fire hose by that point. Yeah. And I was like, yeah, absolutely. Y'all can invest. How would you feel about maybe being 50-50 partners on this and raising half the equity? And they agreed to it. And we have since actually acquired another hotel together. So we're partners on 2 properties with them. And the other 2 properties that we went under contract on that first year are here in Charlotte. And we partnered with Abacus, Wes McAdams, and Brick Bryant. And they came on board and had a similar structure to where they raised 50% of the equity. But more importantly, and this applies to the partnership with Savara and Blowing Rock as well, Abacus provided just, invaluable expertise and insight into just how to execute the business plan. And it was just experience that I truthfully thought I had, but I didn't. And they have just proven to be, both Abacus and Savara have proven to be absolutely invaluable partners.
That's
and
awesome.
I owe a lot to them because it helped us put 3 deals on the board that allowed Piedmont to go out and be able to attract partners to come and join from other firms here in town.
Sure. Why don't you explain, I'm asking for a friend, the business model, how does each deal work? Mm-hmm. And, how do you make money and how do you add value to, your partners, your investors? But imagine I'm 10 years old.
Yeah, absolutely.
Simple terms.
So it's really, when people ask that question, the answer really is as simple as you think it is, at least within the scope of what we do, because we're not developers. Development is highly complicated. We are real estate investors, so we're only looking to acquire existing assets. So at the end of the day, it's no different than if you see a house for sale that's dilapidated and falling apart, but in a good location, you drive by it and say, wow, I could buy that. We could put a new roof on it. We could paint it. We could put new appliances in the kitchen. And we could probably go and rent that house for $3,000 a month. And depending on how much money we're putting down on the house and what our loan is on the house, what we're going to owe on the mortgage of the house, can we have enough to cover the expenses and the mortgage to put in our pocket? It's pretty much the exact same thing, just on a bigger scale. And typically the product that we acquire is not dilapidated. Real estate has a spectrum, and it really has 4 criteria called core plus, value add, and opportunistic. And within that scope, there's a risk return profile. So your core assets, you're typically buying highly stabilized properties in irreplaceable locations. Those are going to be the most expensive. Core plus, mostly stabilized, probably a more secondary location, but still not a very risky acquisition. Value add, it's exactly what it sounds like. You're trying to find something and add value to it, whether it's going in and putting in a new facade or a new roof, or if you're trying to backfill the vacancy with tenants that you might have that are looking in the area. And then opportunistic is typically just a straight ground up development. So obviously with development, that's the riskiest, but it's also the highest return.
Right. Piedmont
tries to reside in the middle between the core plus and the value add. Okay. So when we typically look for a property, we want to find properties that are in the path of progress. If you're looking at Charlotte, we're not really looking in South End or Camp North End, or really anywhere within like a 3-mile radius of uptown. If you look at our acquisition portfolio, all of our product here in Charlotte it's pretty much like 5 to 7 years out, if you will.
Okay.
But they're properties that are anywhere between 90 to 100% occupied, have cash flow coming out of it. And the borrowing environment was so friendly these last couple of years that we were able to get some really good debt terms to where we're essentially buying covered land plays that are providing distributions to our investors. So
Okay.
think of it just like buying a rental house and investing money into the rental house to be able to get more rent out of the tenants that you put in there.
Okay.
And we've done a slight deviation from that strategy of rates have risen. We've gotten into self-storage acquisitions and still trying to find value add opportunities. But value add and self-storage is typically, unlike retail, you're going in, you're putting in new signage, rebranding the center, painting it, giving it a new parking lot and landscaping. On self-storage, the stuff that you've probably driven by that has the roll-up doors and the barbed wire fence around it, in those instances, we're trying to add value just through implementing technology and daily pricing algorithms and try to find properties that are below market in their rents to where we can go purchase them and invest in technology to go and raise the rate accordingly.
So along that whole spectrum of what needs to happen for that acquisition, how do you guys make money? And, I will think, sometimes as an investor with some equity in the deal, what about like property management, managing the finances of the building? How does that work?
So we outsource almost all operations to third parties, whether it's property management or property level accounting. If there is a construction component, obviously we'll hire a general contractor and an architect. The four of us at Piedmont, we are all at the partner level. We don't have any in-house employees to oversee the actual day-to-day servicing that the properties require. Our partner, Jonathan, he manages those relationships on behalf of Piedmont's assets. But we make money through it co-investing in the deal, but also just through sweat equity. When we bring opportunities to our investors, we carve out a piece of ownership for us to have, but we also write checks in with the other investors just to create alignment.
Sure.
Because obviously if anyone's coming and trying to pitch you to invest in their deal, you want to make sure that they have skin in the game.
Right. And you're doing work, actual work
Yeah.
that you need to be paid for.
Absolutely.
It's just that nobody asks you to do it and you're doing it. But at some point, you're actually delaying your compensation.
Right. And we have fees that do come in. We have fee structures included in all of our operating agreements, but that's really more so to cover the day-to-day overhead so that we can exist as a company, paying rent, health insurance, keeping the lights on, hardware, software, et cetera.
Yeah.
The real opportunity for us as real estate investors is dependent upon the properties themselves, not necessarily Piedmont Capital as a company.
Sure. Yeah. How do you divide the work within your partners, and what does each of you do?
So when I started Piedmont, my partners they're also friends. My friends, they're gonna laugh when they hear this because I tell this story. I literally wrote a list of people in kind of those different lines of any business that I mentioned earlier: your business development, your finance, your operations. I wrote down people that would fall under those silos that I had created relationships and become friends with, because at the end of the day, I'm going to be spending as much time with these guys as I am with my own family. So it's very much a marriage in some
100%.
respects. So I wrote down a list of people that I would want to work with, and it was about 6 people. And they always laugh because it reminds them of the scene in Billy Madison where Steve Buscemi has a list of people that were not nice to him in high school. So that they always give me flack for that. But I had written down people that I knew and that I trusted and that I respected, and equally as important, I knew other people respected and that were going to bring a lot of credibility to the company. So I mentioned those joint ventures that I had done on the first 3 deals. I realized that a lot of the properties that were in the pipeline, I really just needed help sourcing debt and closing the deal. They weren't necessarily capital intensive projects that required construction management and stuff that was just way beyond my scope of experience. So I reached out to a friend of mine, Michael Threcold, who was with Grubb Properties at the time. And we grabbed beers, and this was October or September of maybe 2021. And we just kind of talked through it for about 6 to 8 weeks, and he joined in an official capacity early November of 21.
Oh, and wow. That was fast.
Yeah, it was. And he has been beyond terrific. One, he's an amazing friend and coworker, but two, having someone from a firm as like respected and established as Grubb, to have him leave a firm of that magnitude to come to, at the time I was working in my basement, to come to little old Piedmont, it really added a lot of credibility to the firm by having him come and join. And with him, we were able to close 5 deals because he oversaw sourcing the debt and closing the deal. And we were able to close deals by ourselves without doing joint ventures. And that allowed us to be able to go out and talk to another person on that list, Chris Lingerfelt, who was at JLL. Chris was in the office investment sales team, has sold many marquee properties here in Charlotte, the Lowe's Tower in South End, the Rotunda building in South Park. So
were both in your list?
Yeah.
Both of them?
All 3 of them. Wow. All 3 of the guys at Piedmont were on my list. Yeah. And Chris and I had been, we had talked about it early on as well. The very first week that I started the company, Chris and I had lunch and had kind of discussed it. So, but Chris does all of our financial modeling and our underwriting.
Yeah.
So I'll find the deal. We'll get financials, rent rolls. Chris will underwrite the deal, do the financial modeling, and take the rent roll and work with our assumptions to build out if it's a deal worth pursuing or not. And then Michael will source the debt to provide a loan on the property and then work with our attorneys to close it. So that's kind of the 3 silos on the front end.
Yeah.
And then in April this year, Jonathan Stewart from Northwood joined us. And so Jonathan does everything post-close and does all of our asset management, manages our leasing relationship, leases some properties directly on our behalf, oversees our property management, works with property level accountants. So while I'm still on the front end. So if you look at a deal through the different phases, very long-winded way of answering your question while providing biographies. Yep. I am responsible for sourcing the opportunities and keeping the pipeline full of properties worth pursuing. And then when we get it under contract, I also oversee our equity raising. But when we find an opportunity, like Chris underwrites the deal, models it out to see if it's a deal worth pursuing. If we like it, we'll put it under contract, and then Michael will work with a lender to help source debt for the property, and then work with our legal team at Alexander Ricks to close the property with the seller. And then once close happens, that's when Jonathan takes over. So, all 3 of them were on said list, and they're friends first and foremost, and I'm beyond fortunate to have them be my coworkers.
That's awesome, man. Yeah. You guys are rock star team.
Thanks, man. I owe very much of it to them joining.
Who is good fit investor for the type of properties you guys work on, and how do you find those investors? Who are they?
A lot of it's word of mouth. One thing that I think differentiates us from a lot of other firms, if you ever see like an offering memorandum, and I'm not saying, I don't think we're the only firm that does this, but a lot of offering memorandums have investment minimums. Oftentimes it's, mid to high 6 figures, and a lot of people would love an opportunity, but just say, man, I can't, part with that much money because I'm either not in a position to, or I don't have that amount of money. We don't have investment minimums on our deals. And our logic behind that is our peer group, we're all in our mid 30s. So a lot of the folks that we're reaching out to are just now starting to realize, disposable income in their lives for the first time, been in the working world for 15 years, getting settled in with a family, and might have some excess capital they're looking to invest, but it might not be $500,000. So our hope is to create relationships, create a track record with those investors so that over time, they will evolve into to bigger investors. And we do have some bigger investors as well. Quasi-institutional groups, a few family offices that have come in on deals of ours, and it's a full spectrum on our investors. We typically have anywhere between 20 to 40 LP investors on each deal, and we capitalize each deal one at a time. We don't have a fund. We don't have any money that's at our disposal on the front end, and it really allows us and it forces us to be very deliberate about the stuff that we pursue.
Yeah.
It's not money that's sitting there that has a shot clock for when it has to be deployed. We know that if we're going to raise money, which is a time-consuming process, we're going to have to go to these investors, and we have to know that not only does it make sense for us, it has to make sense for them to part with their money.
Yeah.
Especially in a higher rate environment like this, where you have less risk alternatives with bonds and treasuries that are flirting with 5% now. So we have to make sure that it is an investment that is worth them parting with their hard-earned money.
The Power of Design podcast is brought to you by OSA Studio, a multidisciplinary design firm focused on creating impactful experiences through the power of design. We partner with our clients to create buildings, interior spaces, brands, and strategies that help you deliver a successful project. As a minority-owned firm, we are committed to building a diverse platform of curious and driven design professionals so we can together pursue our full potential. For more information, please visit us at www.osastudio.com.
What would be your pitch if a potential investor is listening to this? What will be your pitch to them? Why invest with Piedmont Capital, and what are some of the returns that you offer so that it's attractive for them?
So we typically target assets that are in high growth corridors throughout the Carolinas. We only invest in markets with which we have an intimate level of familiarity. A lot of people compare Nashville and Charlotte. And we've never actively looked at a deal in Nashville, but people have been like, y'all should go look over there. And I hear great things about it, and I love it as a city, but I would never invest our time or money there, just because there is definitely a Piedmont Capital equivalent there that's comprised of 4 people that have significant ties to the area, know Nashville like the back of their hand. And we're just never going to be able to compete with that. So we like to focus on what we know, the markets that we know. And we like to be very patient with our acquisitions, with the exception of there's a few exceptions where we have shorter horizons, where we're looking to dispose the assets sooner. But the majority of our portfolio is lower risk, typically an annualized return between 8 and 10%. But we try to target properties where the value of the dirt is eventually, during that hold period, going to be worth more than the value you're deriving from the rent roll. And that's why we love just being in Charlotte. And you're seeing a lot of developers and investors try to plant flags in Charlotte, and a lot of them are having great success. But I think at the end of the day, being from here, and collectively the 4 of us, have been in Charlotte, in our professional careers over, nearly 50 years now combined. It allows us to be very deliberate with the opportunities that we pursue, while providing, risk-adjusted, lower risk returns on tangible assets like commercial real estate, instead of something that's a little bit less tangible, like you might see in the stocks and securities market, or, God forbid, Bitcoin.
Yeah. Anything can happen now.
Yeah.
Interesting. Tell me a little bit about yourself, in the business world. How do you kind of approach, having your own business, not having a paycheck, ups and downs. There's sometimes you're dealing with people that you realize you shouldn't be talking to them, all these things. How do you personally approach that and balance that with your family, running the business, learning, growing, things like that?
Yeah, I mean, time is obviously the most finite quality and most finite resource that we have. It's quite literally the only thing that you can't buy. And I've been very fortunate to be able to have the 3 folks that joined Piedmont, because that has really allowed me to really divide that burden over 4 sets of shoulders instead of just one. There's no way that I would be able to do this by myself. Yeah. I tell people, and it's the God's honest truth, like, I started Piedmont. I filed the incorporation papers. I got a logo, but I did not build it. It has very much been built with the three folks that have come and joined the company. They very much have, a most instrumental part in getting it to where it is. And that has really enabled me to have that life work balance that you typically wouldn't associate with someone starting a business 2.5 years into it. But while we do have our silos, if someone's out of town for a week, like the other three are there to kind of cover them while they're gone, to where you can actually go away and really enjoy it. And not have to be constantly checking your email or putting out fires. So, but yeah, I mean, time, as I mentioned, it's finite, and that's why, I was very selective in the folks that I wanted to reach out to, which, at the end of the day, you're being vulnerable when you're asking someone to come and join, because they could always say no. But I'm really happy that I did, because I love my life. I mean, fortunate and blessed are beyond understatements, and I have an unbelievable family and wife and kids at home, and I'm very fortunate that I have such great people to work with that allow me to be able to maximize my time with Katie and our three kids, especially at 6, 4, and 2, and this most precious window of their life. So yeah, I'm beyond fortunate.
Yeah, sometimes we don't think too much about what we have, and even when I think about it, we are millionaires.
Yeah.
You know how many people in the world have no access to what we have?
Yeah.
Having your family, having your business, having a good place to work, having a nice environment. Just looking what's happening in Israel. That's crazy.
Oh, I've unfortunately, that has been top of mind for pretty much everyone. And it definitely has like recalibrated what matters at the end of the day. I mean, you and I talked before the podcast, like how our week was going, some good and some bad. And that's how every week is. But is the bad really that bad in the scope of everything? But you asked, about no salary, like how do you combat with that? You're always looking out the windshield of, hopefully when these deals, do get sold, do get stabilized. That's kind of what keeps you going. And in the interim, you offset that lack of a steady biweekly paycheck with something that you might not have had in your previous job. And that's being able to come into the office when you want to, being able to skip out of work early to go take your kid to practice, or being able just to leave at 4 because your work's done for the day and you're not going to sit there until 5 or 6 just to save face. Like we're compensating salary in this time with flexibility and the ability just to go and come as you please, as long as your work gets done. And, like I said earlier, time's the one thing that you can't buy, but you're able to offset lack of an income stream with time that you're not going to be able to get back that you might previously not have had. And
Yeah. One of the things that I really value is just having the autonomy to make your own decisions, and you will face the consequences, good ones or bad ones, but you don't have to ask someone, you don't have to ask for permission. Because that's something, I worked for others for many years, and I always remember some frustration when they said, let's do this. And in my mind, I was thinking, well, I should be the other way. But I could voice my concern, but what I said was not done. And now just having the ability to make the decisions, that feels amazing.
Yeah. Autonomy, it is a very freeing feeling. And it's something that it's pretty hard to describe. And thankfully, I think in, this post-COVID world, I think the work environment is becoming more autonomous, with, work from home and more flexible work hours. You and I and pretty much everyone that's in this building, just has that. And I don't think any of us take it for granted.
Sure. What would you say makes you good at what you do?
The team that I have around me, I really owe a lot to the folks that have taken, as much risk as I did going out and starting the company on my own. So it's your ability to know who is the right person for a specific role. Yeah. I don't know. It's necessarily like a strength that I have. I think, it is something that I have benefited from for sure.
Sure.
Being able to, because at the end of the day, like I was saying earlier, these are kind of like marriages, and you don't want these to be professional divorces, because those can be timely, those can be costly, and then they can just continue to drag on. And thankfully, I know that that's not going to be the case with the folks we have at Piedmont. And I think ultimately, kind of like I was saying earlier, like that's really where so much of the success is owed to, is just being able to surround yourself with a team of competent, like-minded people who have skill sets that are highly complementary to each other.
Yeah.
I think that is the biggest reason that the company has been able to get to where it is in 2.5 years.
Yeah. What's your vision for Piedmont Capital? If you were to describe Piedmont Capital in 10 years, what will you be doing?
It's so funny you asked that, because we're actually in the process of trying to add our first a controller, like our first salaried employee. And we had this discussion recently, and I told them in the interview just how at every iteration, when I started it, and then when Michael joined, and then when Chris joined, and when Jonathan joined, it just takes this turn from where I wasn't necessarily expecting it to go, but it's always been somewhere that is good, and it's not what I expected.
Yeah.
In 10 years, would it be great to have 40 to 50 properties and 8 to 12 employees? Yeah, it would be awesome. But honestly, I truly don't know. And the uncertainty more than anything is kind of what excites me, because kind of like I was telling you very early on, like I didn't even know what I didn't know. I don't truly know what it can be.
Yeah.
I have ideas, but I think what it's going to wind up being is something that is way different than what I presently expect it to be.
Sure.
And that to me is way more exciting than it is, angst inducing.
That's a great answer, because we can think about the future, we can think about the past, but the only thing we have is what we have right now. So if right now this is the business I have and I love it, then it's great and I feel good. Could be better, could be worse, we don't know. But
I think it's really important.
What do I waste my time worrying about something that hasn't happened yet?
I think it's very important to take stock and just kind of literally try to step outside of yourself and just evaluate like everything that you have in your life. And it's something that I try to do, where I'm just like, all right, rewind 3 years ago in like the middle of the pandemic. If someone told you that, hey, in October of 2023, like you would be working with Michael Threckold, Chris Lingerfeld, Jonathan Stewart, you and Jack Ossa were going to be partners on this really amazing building right in Montford Park, walking distance to all your favorite restaurants. And you would be just...
You'd be like, no, you're crazy.
I'd be like, no, that's insane. Like the world's ending and you're out of your mind. So we talked about the good and bad that happens on a weekly basis. Anytime, the bad overshadows the good, I try to be mindful of that and just kind of take stock of like, okay, like, no, things aren't bad. Things not only are not good, they're actually really awesome. And, we're beyond fortunate to be in this position.
Yeah, I agree 100%. We're at the end of this, and my last question is, do you have a question for me?
All right. Wow. I didn't think about this on the front end. I'm going to flip the tables. Where do you see Ossa Studio in 10 years? Because unlike, the 79 predecessors that have sat in the seat, I've been able to watch your company grow over the last, 2 years, sharing office space in our co-working space, and then now seeing it grow here. And I love that you and I get to share our wins, in the common area. Like when you get a new client, I celebrate that like it's a deal that we've closed. So I want to know, where do you see this machine going over the next decade?
Over the next decade, I really love to, grow the firm. And, we're professional services firm. So it's people. Growing, number equals revenue, and that's how you measure the success of this. But I'd love to grow it to a size where my involvement in the company is not required. So there is a leadership team that runs the company. I can help, I can show up, I can sell, but I don't have to. So today is what, 2023? So 2033. Yeah, I think at that point it could easily be maybe 100 people farm, maybe national locations, international, in Colombia. I think there is a high possibility that could be a reality.
Mm-hmm.
So it's a international design firm where I'm involved, but I'm not required to be part of the operations.
Yeah.
So I can enjoy time with my family. I grow a leadership team where we're doing amazing design work. We're helping people with their projects. We are very well run. We're making a lot of money. And I'm enjoying life with my family.
Follow-up question. Do you ever see yourself retiring?
No, I don't think so.
Yeah.
I don't think so.
Yeah.
I think just waking up and like, okay, so what do I do today?
Mm-hmm.
I feel that I always have to be doing something.
Yeah.
Yeah.
I'm in the same boat. I think working your entire life, it keeps your mind sharp. And my dad, I don't think will ever retire, and I'm happy to hear that because I want him to have a long, fruitful life. And I think that employment gives obviously a huge sense of purpose. And in your shoes, employing others as well, being able to help them provide a way of living. So
yeah. Cool. Well, William, thanks so much for your time today. I'm very excited about the future of your business and what you guys are making happen with Piedmont Capital. I'm very excited to be your friend, to be partners on this building. I think we're just getting started, and it's gonna be an amazing ride.
Yeah. Here. Thanks for having me, Jack. I really enjoyed it.
Sounds good, man. Thanks.
Thank you.
Thank you for listening to the Power of Design podcast. Please remember to subscribe, rate, and review if you like this content. And find us online at thepowerofdesignpodcast.com. I invite you to join my mission to become a better version of yourself through the power of design.